The truth is, there's always a better entry. If you take a 12-hour execution on a swing trade, you might pull a 2R. You drop to the 4-hour, you might pull a 4R. You drop to the 2-hour, you might pull a 6, 7, or 8R trade. And that's the truth of swing trading. Is it a better entry? Yes. But what does it cost you? More time. So you need to adjust your trading strategy to your lifestyle so that you swing trade in a way that makes you comfortable. Let me show you the same price analysis across the 12-hour, 4-hour, and 2-hour, and how you would execute certain trades to play the same swing trade thesis. The truth is, the 2-hour gives you the best entry, but it also costs you time to analyze the pair. So let's get into it, because I would never sniff at a 2R 12-hour swing trade. So this is USDJPY. What are we looking at? This is 12-hour price action. We are going to swing trade weekly, 2-weekly, and monthly candles, and always higher time frame, accumulation, manipulation, distribution, because that is how markets move. So the first thing I'm going to do is overlay the weekly time frame. What do we see here? We see that price is raiding the high of the previous weekly candle, and it is selling off. We then get an order flow shift. Price is bearish on the way in, raids the low of the previous week, and then shifts bullish and gives us a super clean 12-hour entry. But right now, the week is not really telling us much. If anything, it's saying it's going to distribute lower. So let's go up a time frame. Here we have the 2-week. Okay, this paints a very different story. Price has swept the previous 2-weekly candle. It's always also run into this candle's low. So all the external range liquidity at these lows has been swept. And this 2-week candle importantly closed inside the previous 2-week range. So our higher time frame target for price is the high of the 2-week accumulation candle. Accumulation, manipulation, price is reacting as we saw from the previous week's high, but it is manipulating before its true intention, which is to distribute to the high here. So when we see this shift, it's in context and it is loading to send price to our target. So the first entry that we have is a comfortable 12-hour entry. If we enter where? At the fair value gap, target the high, then we have a clean 2.2R trade. Let me show you exactly what we're trading from. We have the last sell to buy. This is the bullish 12-hour order block. It's the last sell candle before price bought through it. And in here, importantly, we also have a bullish fair value gap. This is an inefficiency in price between candle 1 and candle 3. Why is it important? Because it shows aggression volume coming into the market, leaving an inefficiency that price can trade into before it trades to the distribution high. So, is this a good entry? 2.2R swing trade executed on the 12-hour time frame. Incredibly safe stop, easy entry, analysis around sort of 10 in the morning. Let it play out. Price tags you in, you have to do nothing and it hits your target. But are you leaving R multiples on the table? Inevitably, yes. So let's drop down to the 4-hour time frame. Exactly the same price action. So we see price distribute lower, then we're starting to see shifts. Now, let's take away the 12-hour analysis and reanalyze on the 4-hour. So, this is the 12-hour fair value gap. What do we see here? Well, we see the 4-hour shift bearish. So here's the buy to sell. Then we also get a new buy to sell that never gets closed through. Price aggressively shifts. So again, this is an order flow shift. Now, it's very subtle, but there is a fair value gap between this candle and this candle. And price drives into it and then trades away. This aligns with our 12-hour entry. So if you were analyzing this as a 4-hour trader, if I'm honest, you have the exact same setup. because you are entering at the first fair value gap, which is subtle, but it sits right here. You're probably then covering the swing point. However, you could refine this. You could tighten it below this order block, buy to sell, which then means exactly the same trade is now a 2.82R. So you've added some return on the trade by just refining on the 4-hour time frame. This can be a huge additional R multiple in certain trades. The 4-hour can almost double your 12-hour entry. But in this particular trade, the interesting part sits on the 2-hour time frame. So if we now drop to the 2-hour time frame, we're seeing our 4-hour entry. What do we see in advance of this? So when price is selling off here, if you are spending time on the 2-hour time frame, you can see price trading lower. You get buy to sell, buy to sell, the last buy to sell. Then what do you actually see? It's an order flow shift. There is volume in, volume out. There is the fair value gap. If you want me to zoom in, I can actually explicitly show you this. So here's the 2-hour price action. You've got the bearish fair value gap. It sits right here. Let's mark it in red. So price is trading in. Here is the bearish order block. It's the last buy to sell. Price then trades higher, creating what? A new sell order block to buy with a bullish fair value gap. So this is our order flow shift. Price then trades into this inefficiency in the exact same way that it did on our 12-hour example. But at this point, we're front running that trade. So this is the earliest point you could have got involved. Where does your stop go? Below the low. And where can you hold this to? The exact same target. So now you're looking at a 5.7R trade. However, this is front running. So what if you want to use the 2-hour to confirm the 12-hour or 4-hour trade? Well, it's even easier and it's higher probability. Price reacts. We know this is a pullback into bullish 4-hour structure. So we get a new shift. We've got order flow in, order flow out. There's the bearish fair value gap. Price trades in, goes lower, comes into the newly formed order block, tries to go lower, and it can't. We then get an order block shift. Price reacts higher, creating, here's the extreme order block. This is a super refined entry. If I'm honest, I'm never taking that. It's just too thin for me. But if I take the high of this sell to buy and I enter from here and then either cover, if you want to be super aggressive, this low, or more conservative, this reaction wick, and back to the high, 4.34R trade. And again, this is just refining on your lower time frame entries what you're already trading on your higher time frames. So is this a better entry? Without a doubt. You're over doubling your return on the trade, but you're also investing a lot more time, because every time you see 2-hour candles printing here, you need to be on it. You need to deal with the stress of these order flow shifts. Make sure that you get in at the right time without making an error. The alternative is you just take the easy 12-hour trade, cover the low, and get on with your day, 2R. So these are the choices you need to make as a swing trader. There is always a better entry. If I went down into the 15-minute, the 5-minute, the 1-minute within that 2-hour shift, I could pick out a super refined entry. But again, you have to be there. You have to invest the time. And this is always the trade-off. What I would suggest is always trade swing trading framework trades. Higher time frame, accumulation, manipulation, distribution. And then enter when you're seeing reactions from 12-hour daily internal range liquidity, and use then your refinement, your 4-hour, your 2-hour to get these high probability refined trades. And if you can't be bothered with that, stick to 12-hour execution, because you can be a very profitable trader by just doing this. If you want to learn more, I've got a 30 video 3-part series on this exact strategy on my channel for free, and I'll see you on the next one. Please subscribe.